Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. So, we accountants sometimes throw around a lot of terms and we assume that everyone knows what these terms are because in our mind, they're just common terms. We're used to them. And one of the terms that I get a lot of questions about is what is owner's equity? This is a term that you don't hear a lot about, but once you start digging into your balance sheet, you're like, well, what is this? And so owner's equity, it is on the balance sheet. So if you remember on the balance sheet, you always have your assets, then you have your liabilities, and then you have the owner's equity section. And the owner's equity section is always the last section of the balance sheet. So today I want to tell you what owner's equity, the definition of owner's equity, and why it's important. So owner's equity is the amount that is left over after liabilities is subtracted from assets. That's all it is. So what goes into owner's equity? So what goes into owner equities are three things. I'll just keep it simplified for you. So it's the money that is invested by the business owner. Number two, the profits from the business. And then number three, it's minus the money taken out from the business. So that could be an owner's withdrawal. And you may say to yourself, well, why is this so important? Well, owner's equity is an indicator if the business is successful. And when we say successful, okay, is it making a profit? And so if the owner's equity account, or I should say owner's equity is increasing year over year, it's a good indicator that, okay, the business is successful. However, there's always a however in accounting. However, you want to make sure that increase is due to profit. So remember, what goes into owner's equity is money invested by the business owner and profit. So those are the two that will increase owner's equity. So you want to make sure that the reason that owner's equity is increasing is due to profit. So sometimes in the early stage of the business, owners they may have to put more money into the business so their owner's equity is high. That's okay. However, the long term, you want the reason the owner's equity is increasing is for profit because you want to make sure that the business is making a profit. So I challenge you this week, take a look at your balance sheet, look at your owner's equity, and then compare it to the last 2 years and see where you are. So make sure you like, comment, and share our video. Make sure you subscribe to our YouTube channel to make sure you ensure you get the notifications. I'll see you next time. Take care.